All right, why don't we get started and we'll let folks trickle in. So good afternoon, everyone, or good morning, good evening, depending on your time zone. Welcome to the session. My name is Alan Mattamana. I'm a partner with Fairview Capital. And just a real honor to be moderating today's panel on venture capital investing into the future of workforce productivity. I'm joined by Kevin Spain, a general partner with Emergence Capital, which I can say without fear of contradiction is one of the most successful venture capital firms in the industry since its founding some 2 decades ago now. So very much looking forward to the discussion. Just a quick housekeeping. As we go along, the Q&A chat should be open, so feel free to submit your questions using that function, and we'll save 10 to 15 minutes at the end of the panel to go through them. Just a quick note on Fairview before I introduce Kevin formally. Fairview is a venture capital investment management firm. We were founded in the mid-90s. We invest in venture capital funds. We co-invest alongside them directly into deals, and we also have a secondaries practice. And all told, we manage approximately 10 billion in assets and are headquartered in Connecticut with a San Francisco presence. I think of relevance in this discussion, our venture fund investment activity happens in 2 formats. The first is a fund of funds focused on the most successful venture capital franchises in the country. And the second is a next generation or emerging manager platform, which targets new upcoming funds, typically first, second, third time funds. And that's actually a great segue to the Emergence relationship. We were thrilled to be one of Emergence's first institutional investors out of our next generation platform. This is back in 2004. And then we partnered with Emergence through each of their last 6 funds, initially, again, out of our next generation program for the first 3 funds, and then out of our flagship venture program, beginning with Fund 4. And they're now investing out of the 6th fund. So I'll turn it over now to Kevin. Rather than try to summarize your amazing background secondhand, Kevin, I'll let you share a little bit about your bio.
Well, thank you so much, Alan. It's really great to be here with you all. And I want to start by just saying I'm really grateful, Alan, to you and the Fairview team for being behind us, going all the way back to our earliest days when, frankly, there weren't a whole lot of LPs that were willing to bet on a fairly young team that was kind of doing something unique for the first time. So thank you for all your and Fairview support over the years. So a little bit on me, just I guess to start with. So I'm one of the general partners at Emergence. I have been at the firm now for 15 years, actually just passed my 15-year anniversary earlier this month. So it's an interesting occasion to be talking to you all. And my career really has been, for the most part, in and around software. A big part of what we do here at Emergence is investing in companies, sort of next generation software companies. I'll talk a bit about that. So I've been involved essentially in software as an investor since I joined Emergence. But leading up to Emergence, spent some time at Microsoft, where I was a member of Microsoft's corporate development team, doing acquisitions and investments really across Microsoft's entire business. And I was working for them out of their headquarters in Redmond, Washington. Spent a little bit of time before that in the consumer software world. So I was at EA, Electronic Arts, one of the largest game publishers in the world, where I was initially part of the team that helped get their online gaming business off the ground, and then was doing acquisitions and investments for them. And then before EA, and this is actually what brought me into technology initially in the late 90s, I actually co-founded what today would have been called a SaaS business. It was a company that was building marketing software for small businesses, and we were doing all of that within the browser, so very much ahead of our time. Did that during the dot-com bubble, and unfortunately didn't make it out of the dot-com bubble. That business unfortunately didn't survive the crash. But basically since the late 90s, I've been in and around technology and in and around software. And so that's a little bit on me.
That's great. And fun facts to know and tell, Kevin also wins the Dad of the Year award for taking his family on a multi-state RV road trip?
That's right. Yeah, we did. We headed out to southern Utah to go to Zion and Bryce National Parks. It was a really good time. So if you need any RV tips, you can ask me. I feel like I know almost everything at this point. So.
Sure, that's a whole another panel topic. But turning to the topic at hand, the focus here is on venture investing in workforce productivity. And I thought a good place to start, Kevin, would be to hear from you about the history of Emergence. It's built obviously such a tremendous brand amongst entrepreneurs, but I want to hear from your perspective, what makes Emergence unique and how does it stand out amongst all the other venture firms in the industry?
Yeah. Well, I think we definitely do some things differently at Emergence. As part of the reason why I think it was a little challenging when Jason, Brian, and Gordon, the founders of the firm, went out to raise their first fund. It has been a different story from the very beginning. And I'll describe some of the ways in which we do things differently. I think just to start with, we are a focused firm, right? So while so many other firms have decided to go across stages and across sectors and across geographies, we have remained very centered from the very beginning on investing in early stage B2B technology companies. And early for us really means primarily Series A investing, where we take a board seat and we work shoulder to shoulder with entrepreneurs as they are building their business. And a big part of the reason for this focus, going back to the beginning, was that the founders of this firm really believe that if you focus on something, you are likely to do it better than others. If you know a market better than others, you can pick the best companies and you can help entrepreneurs in that market better than other investors can. And at the time when they were raising their first fund, that was certainly not a very popular way of thinking about doing venture. Right. And you may remember there were some focused venture firms in the late 90s in areas like optical networking, as an example. They kind of picked the wrong market to focus on. And so that's kind of where it all ended. But I think at Emergence, we were lucky enough to pick B2B because, the founders really believed that, we were going to see the internet and new technologies create massive opportunity for founders and investors in the space over the many decades to come. And they were willing to bet the farm essentially, right, on focusing on that area. So that's one key way in which we are, I think, fairly different than most firms. We are very focused, and we've remained so. I think related to that focus is we're not very big. We acknowledge that if we want to invest in the best companies every year, we can only invest in so many. And if we're only going to invest in so many companies and we want to have a lot of time to spend with those entrepreneurs, we can't have a huge team. And so, we have a pretty concentrated team. The entire firm has about 30 people in it. And the investment team itself is only about a dozen people. And we only have a half dozen partners in the firm. And that's remained pretty consistent, for the last, 5 to 10 years. So we've remained very focused on having a modest-sized team and also modest-sized funds. Our latest core fund that we raised earlier this year, our sixth fund, is a $575 million fund, which to me feels like much, much bigger than our initial fund, which was 125. But, when you just think about, how much bigger Series A's have become, we have been able to sort of really focus on having a small fund, small number of new investments every year, and a relatively small team. And then probably two more things that I would mention that are kind of unique. One is our culture. We have this culture of promoting people from within. We've never hired an outside partner into the firm. We've only hired people who are pretty early in their careers. I came up through this path, and we've developed them and promoted them up to the general partner ranks, to the point where today in our partnership, we only have one founder still in the firm, and all the other partners in the firm actually have come through this development path. So that's one of the constraints, one of the things that constrains us, right, in terms of how big we can get. We can only hire so many people and grow them through that path. And the last thing I'll mention, which I know we're going to spend some time on, is our thematic approach within B2B. At any point in time, we've got a few major thematic areas that we really spend a lot of time and put a lot of effort and research against. And we go really deep on those areas and do a lot of investing in those areas. So happy to talk more about that today.
Yeah, I think that's a great segue. Let's do that. I mean, when we first, began our relationship with Emergence, I think, one of the things that Fairview team was struck by was that thematic approach. And, back in 2004, Emergence was leaning in on tech-enabled services, right, which ultimately became, the precursor to cloud computing and SaaS business models. And And that was before those terms became, ubiquitous in the venture industry. So summarize that thematic approach and how these themes have evolved over the last 2 decades and where you are now.
Sure. No, you're right. You're right, Alan. That was actually when I joined the firm. Still on the firm's website, you could probably go to the Internet Wayback Machine and see this. That is how Emergence described what it invested in: technology-enabled services. It doesn't exactly roll off the tongue. What essentially that meant was it was this idea of business applications moving to the internet, what we now would think of as SaaS or cloud. And our original investment thesis was very horizontal, right? We kind of said, look, if you look across the application landscape, if you look across the business software landscape, major categories of software are going to transition from being on-premise, sitting on a server somewhere in your company's infrastructure or on your desktop, to being delivered in a hosted fashion, right, over the internet. And we kind of went through and made a lot of investments in really key areas like CRM. Actually, Salesforce, was one of our very first investments. In accounting software, where Intact, was one of our early investments. HR software, SuccessFactors, which went public and was later acquired by SAP, again, going after that category. And so that was really our initial theme, right? It was sort of this idea of horizontal, what we call now horizontal cloud. And I think what we discovered as time went on, as we tried to keep tabs on all corners of the B2B landscape, which we think is really our job. If we're going to be a focused firm, we have to know everything that's sort of going on in our sphere. What we start to discover are new, emerging, interesting trends and themes, right? And some of those trends and themes sort of come from company creation itself. We start to see entrepreneurs discover an interesting opportunity. And as we see more of that activity happening in an area, we realize, wow, actually, this is a wedge that's going to open up an entirely new, big, interesting market opportunity. And that can become a major theme for us. Sometimes we actually think about it more from a technology perspective. So if you think about, the emergence of mobile devices, going back a decade ago, we spent a lot of time thinking about what that was going to mean for creation of interesting companies in our space. And sometimes, it comes from other places as well. There are lots of different sources of ideas, but essentially what we realized as we sort of were pursuing this horizontal cloud theme initially, we're starting to see these other opportunities, sort of themes emerge that for us were equally as interesting, sometimes even more interesting, right, in the B2B world that we wanted to pursue. And so we basically decided that, at any one point in time, we want to have, 3 major thematic pushes, right? And it doesn't mean that we won't invest outside of those within B2B, but 3 areas that we're very committed to, where we think there's going to be a lot of interesting company creation happening and where there's going to be a lot of value creation. And so we've got a few of those today. I'm certainly happy to talk about those, but the process by which something actually goes through to get to a major theme is pretty rigorous, right? We see a lot of things. And it basically, requires that a group of people inside the firm do a lot of work, bubble sort of an idea up, bring other people on board, and then basically we have a consensus mechanism where we ultimately have to decide, is something worthy of becoming one of those 3 major themes.
That's great. And I guess left unsaid, with 3 kind of major sub themes, but a partnership of more than 3 individuals, there has to be some kind of consensus building on how you get to the core themes that you focused on. I guess related, not only are you focused from a thematic approach, but if you just look at your portfolios, they tend to be more concentrated than what we typically see in venture. And I mean that just in terms of the sheer number of companies in a given fund is smaller than what we typically see. And yet, despite that, you've managed to get access to some of the most successful investments from a returns perspective, including Viva and Zoom and Doximity. You mentioned a couple of others. Zoom alone has a distinction of not just returning the fund, but certainly for us, single-handedly returning the entire fund of funds that had exposure to it. So really just a tremendous venture success story. So I do want to talk about Zoom specifically, but maybe just before that, share your thesis on the theme that led to Zoom. I believe you were calling it social collaboration. Just how did that theme come about? It'd be great to do a deep dive on it.
Yeah. So that's exactly right. I mean, the way that we sort of refer to that theme is enterprise collaboration, right, or enterprise social. Obviously, there's this amazing ability when it comes to SaaS applications to sort of essentially embed collaboration in the application itself in a way that it was frankly much harder to do when you were talking about an on-premise application. By virtue of the fact that you have an application connected to the internet and you tend to have so many more people that have access to that application, whether they're inside the company's firewall or outside, I think this is it's been one of the big ahas for a lot of SaaS entrepreneurs, is that there are really interesting and clever collaborative things that you can do around an application that were harder to do before. But I think, where enterprise social collaboration comes in is, there was this category of company that we started to see beginning to be created, call it, 10 years ago or so, where, companies were really kind of taking elements of what we were starting to see in the consumer world, right? Sort of social types of applications, and they were beginning to create versions of them for the enterprise world, right? For the business world. One of the very first of these was a company called Yammer, which we were very lucky to be investors in, early investors in. Yammer, for those that don't remember, I mean, it was essentially like Facebook before the enterprise, which I think for a lot of companies was pretty scary. But I think one of the things that they realized was that there was an opportunity to build an application that could actually be adopted, a social application that could be adopted from the bottom up, right, inside of a company, that didn't necessarily require sanctioning from the organization itself, but that could be rapidly adopted by end users and employees and then spread virally throughout the organization. And then ultimately, what they hoped was that companies would find enough value in it that they would pay for it, which they ultimately did. And the company was later acquired by Microsoft for $1.25 billion. But I think, between Yammer and some other companies that we were starting to see, we realized that there were, I think, a couple of interesting things here. One, there was an appetite among employees and increasingly among companies to have social platforms internally that help facilitate better digital collaboration. And two, there was a route to market, right, that was pretty interesting, right, and could be very capital efficient, because collaborative applications by their very nature are viral. You want to invite people to be on them with you, which rapidly accelerates adoption in a company. So from those observations and from that early experience with Yammer, this theme around enterprise social collaboration was formed, and we started to actively look for companies that were building, new businesses and new products that sort of capitalized on these mechanics.
That's great, and so I guess the next step of that what was your investment in Zoom. How did you find Eric Yuan, the CEO? How did you had the thesis kind of laid out? You're hunting for it, but how actually did you get in front of Zoom, and what was the early vision and as you say, the initial route to market that you found appealing for that company?
So Zoom was a really interesting one. I think we invested in Zoom back in 2014, I think initially. So it's been at this point 7 years, and today, of course, especially because of the last year and a half, it feels like we've all been using video conferencing solutions forever. But I think if you actually were to go back to kind of the 2014 timeframe, we were in a very, very different place, right? And actually, video conferencing, for the most part, was utilized only by the largest companies out there, right? And you had solutions, sort of a lot of very heavy solutions from companies like Cisco, that large enterprises would deploy in conference rooms so that they could communicate between, offices and regions. And there were some kind of fledgling, desktop products that were on the market, but none of them were really very good. And I think a lot of folks, including a lot of investors, I would even include us in that category at the time, we kind of concluded that this was not a good category, right? It certainly fit this collaboration and potentially social collaboration theme. But I think one of the things that we wondered was whether the technology was ever going to be good enough to actually allow a lot of employees, a lot of users and companies to want to use it. And we saw again and again, company after company in the space come through our doors at Emergence and give us this great pitch, right, about how this is a really big market and it's under-penetrated. Video is sort of the next wave. And you'd play with the product and it would just be an awful experience. So that was it for us. We focus a lot on product. We just know that if a product isn't great, the future of a company is probably not that bright. And so we passed again and again. And so there was actually another company, another one of these companies that we ended up not investing in. I will not mention their name. They had a product that was a little bit better. And it actually caused us to say, you know what, maybe we should revisit this category, right? Let's take a closer look at what else is happening here. And let's see if there's anything really interesting going on. While we're doing diligence on this business, we might as well do sort of a refreshed view of the competitive landscape. And that's when we came across Zoom. And Zoom was a small company. Eric was very low profile, as he still frankly is in some ways. And it was from that work that, we basically what started it was we were like, oh, we should download Zoom and we should try it. And it was just groundbreaking, right? The quality of the experience was unlike anything that we had ever tried. And we actually abandoned diligence on this other company and said, okay, this is a company we want to try to invest in. And that then resulted in really what ended up being about a year-long pursuit of trying to convince Eric to take some money from us, because at the time he was not actually fundraising.
Mm-hmm. That's great. And, Eric has publicly given, I think, a lot of credit, right, to Emergence. And I'd call it for shepherding the company's progress, particularly, the early days. But I know it's been a while now, but take us back to those early days. What were some of the key challenges kind of post-investment the company faced? And maybe we should limit it to kind of pre-pandemic, because I know post-pandemic there was a whole bunch of other issues, but kind of in the early days, what were some of the challenges?
Well, so in the early days, this is what sort of I think is classically known today, at least, as a product-led growth company. I think it still is in many ways, right? What I mean by that is this is a company that basically acquires new users because they just pick up the product and start using it. Not all software is that way, right? Some software you actually have to sell in and you have to deploy it and set it up, in the right way for a given function. But the product itself kind of sells itself, right, in the case of Zoom. And so what we had when we first invested in Zoom, though, was a company that was only using what you now call a product-led growth strategy. They were doing essentially no marketing. They were doing no sales whatsoever, right? And all the growth that they were experiencing, which is actually, as we finally got an opportunity to dig into the numbers, once we earned Eric's trust, they were seeing outstanding growth, right? But it was completely unmanaged, right? They weren't always acquiring the best customers, right? They weren't always managing the accounts that they were in to ensure that those customers were as happy as they could be. They certainly weren't proactively trying to expand usage inside of a company. Once Zoom had a foothold, maybe within a team or two, they were just leaving a lot of things on the table, right, when it came to go to market. And it kind of makes sense when you think about it. So Eric, is an engineer and a product leader by background. So he was actually the person at WebEx way back in the day that created WebEx's first browser-based video conferencing solution, right? And it was kind of there that he learned the way to do it and the way not to do it, right, in some ways. And that sort of catalyzed his desire to start Zoom. But everything the company had been doing to the point when we invested was very centered on product, right? Very centered on all the things that Eric knew very well. And I think, one of the things that we were very focused on, and we told Eric when we told him we wanted to invest, that we wanted to help him with, was helping him build out all of the other functions really in the company to help ensure that he could actually manage growth, drive the kind of growth that he wanted to, and build ultimately the kind of company that he wanted to. And so it was a very classic early stage situation, what we often run into in the early stages of a company, where the founding team often is very product and engineering centric. we get really attracted to companies that have really great initial product market fit, have a lot of happy customers. They had those things. But what we come in to help them do is turbocharge all of that by building out go-to-market and so many other things. And so we spent a lot of time on go-to-market when we first invested. One of the things that we did pretty early on was we helped him recruit a fellow by the name of David Berman. So Dave Berman was actually someone that Eric kind of knew from his WebEx days. He's sort of a tried and true SaaS go-to-market leader. He'd also spent some time at another company called Ring Central, which is also kind of in this unified communications arena. And we brought Dave in as president of the company to help really build out go-to-market. And that's when something that was great, frankly, got even better, right? When we actually built out sales and marketing, and we got even better at telling the world about what Zoom was and how they could take advantage of it. That's when things, really started to accelerate even faster. So I think, Eric has always been an amazing leader. He's always been an amazing learner. And we just feel lucky to have introduced him to some people and some things in the early days that helped them, move the engine even faster.
You're so right about him being, I call it almost maniacally product focused. I remember at the Emergence annual meeting where he was describing literally picking up the phone and calling every customer that had canceled, just because he couldn't believe that the product had a lead, with. By
the way, I would say be careful, because he still does that sometimes. So if you ever cancel Zoom, you may get a call from Eric. Right. He still does that occasionally.
So you're investors with Zoom for almost 5 years before the pandemic hits. Even pre-pandemic had already started to become a verb, right, in people's vocabulary. And then the pandemic happens, and just talk about the impact on the business. I mean, from the outside in, it seemed like you had remote work exploding. You had everything from the education vertical using it as a tool, healthcare using it as a tool, and frankly, just people wanting to maintain social connections. And so that, I'm sure, turbocharged growth. But talk about what that experience was like for the company, and what were some of the hyper growth challenges that the company faced during that time?
Well, I would say without a doubt was one of the most stressful times for any company, I think, that we've ever seen in our portfolio. If you just imagine a situation where literally almost overnight, a huge portion of the world's population wants to use your platform and wants to use it very heavily, that is a major transition, right, for any business. And it's almost unheard of. I would say even in the consumer world, where obviously user bases on applications tend to be much bigger than what we typically see in the business world, what we saw in terms of this sort of rapid spike in usage of Zoom is really almost unprecedented. And so just to start with, the company had to contend with keeping up, right, in terms of capacity and quality. And I won't say that they did it flawlessly, because there were a couple little hiccups, right, during that time, but it is pretty spectacular how they were able to keep up despite all the incredible pressure that was put on them. And I would say this is a testament to two things. One, the absolutely unbelievable work that the team had been doing all along to make their solution high quality, fault tolerant, very scalable. They never imagined that it would be tested in the way that it was, but they built it for the craziest possible case, right? And so that obviously really paid off. The other thing that was really important, because again, it wasn't flawless, and I think that's publicly known, is that the team there was maniacally focused on jumping on every fire they had to put out and being incredibly creative about whatever they could do to ensure that they had the capacity to keep up with demand. And one thing I will say about this is one factor, one trait that we look for in founders that gets us really excited is just complete obsessiveness. about what they're doing. It is really hard to start a company. It is really hard to build a great company, and you have to work really hard at it almost every day for a very long period of time to get there. So if you're not completely obsessive about it, you probably won't make it. But it's in moments like this where someone's, and a team's, not just a founder's, but a team's absolute obsessiveness sort of really shows up. And I think there were many, many, many sleepless nights that team experienced, not because they felt like they had to do it, right, but because they wanted to, in order to make sure that Zoom was able to service, the global need that it was being put up against. So that was certainly one. It's just sort of dealing with the scalability issues. I think the other thing that came along with this, which again was all over the news, as shortly after the pandemic happened, was now all of a sudden Zoom is in the spotlight, right? And in ways that it was never in the spotlight before. And there were some things that Zoom was doing at the time that weren't necessarily optimal from a security perspective, right? And their customers, not like their customers were unaware of these things. It's just that at the time their customers maybe didn't care quite as much, right? Well, now that it was being so heavily utilized, their customers cared a lot. And now that there were a lot of new companies jumping onto the platform, right? They cared a lot. And so there was a lot of scrutiny on security, and frankly, some things that Eric and the team had to shore up very, very rapidly to address them. And again, I give them a ton of credit for taking those things extraordinarily seriously, jumping on them immediately, and doing a great job of addressing what the market demanded from them from a security perspective. So both of those things together were just an incredible weight on the team. But when I reflect back on it today, I mean, they handled it just absolutely impeccably.
Yeah. Thank you for taking us, I'll call it behind the curtain on what was going on at Zoom. And I know it was certainly a rocket ship, but to your point, with hyper growth comes great challenges. Just a reminder to folks on the audience, feel free to send in questions with the Q&A or the chat. I see some coming in already, which we'll get to. But maybe switching gears a little bit, Kevin, talk about the culture at Zoom. I mean, Eric's obviously just an amazing leader, an amazing CEO. I love kind of his core value of delivering happiness, right, to customers. But talk about the culture, how it was built, how does Zoom attract and retain talent as it's grown as much as it has?
Yeah. Well, I think you're right. I mean, their mission is to deliver happiness, and that frankly applies across the board, right? So whether Eric is thinking about customers, he's thinking about employees, he's thinking about investors, he's thinking about partners. I know we're going to talk a little bit about Zoom platform, folks building on the Zoom platform. He wants everyone who touches Zoom in whatever way they do to be really happy with that experience, truly happy, delighted with that experience. And he means it, by the way, right? I mean, it is absolutely authentic that this is what matters to him. And I think, for him, it is, and it makes sense. That having that as the core value, it really is, it's kind of the essence of what really any company should do, right? I mean, what is the reason that a company should exist? It's to solve a problem in a delightful way, right, for a customer, right? And so I think, embodying it in the way he does, to actually refer to it as happiness, I think is really amazing and delightful. I think it's what every company should do. I think when it comes to employees and how the company attracts and retains employees, I mean, look, it helps that it's a product that everyone uses, right? I think, sometimes, recruiting can be a little bit harder when you've got to spend the first half of a first interview just explaining to a candidate what a company does, right? And why it matters. I think, everyone certainly at this point understands what Zoom is and why it's important. And I think that has this amazing benefit of attracting incredible candidates to the company. And also keeping, great employees, right, in the company, because there's an important mission here. I mean, beyond, delivering happiness, right, what really Zoom is about is enabling people to stay incredibly well connected, right? And we've all experienced that, obviously, right, during the course of the pandemic. But that's such an important and really inspiring mission to be part of, right? Frankly, whether it is, family members staying connected or colleagues staying connected, I mean, Zoom serves an important societal purpose, right? And so I think they're very lucky, right, to not only have had the impact that they've had, but to have that as an amazing attractor for great people to come and work with them.
That's great. And as they capitalize on that purpose, Kevin, what is the future for the company? I mean, it's obviously publicly claimed to be moving from an application, which is kind of where it started, to more of a platform. There's the Zoom apps. What does that vision look like? And was it obvious to you at the time you invested that's where it was going to go, or is this kind of a more of a recent thing?
Well, I would say no, Alan. To just the short answer to your last question, which is, was it obvious to us that this company would have an opportunity to become a platform? Absolutely not. I think we often, as investors, I would say, just at least at Emergence, we often sort of put aside this idea of a platform ever being something that a company will be able to do, because frankly, it's very few software companies that ever ultimately earn the right to truly be a platform. To be a platform, you have to have incredibly broad usage, right? Because if you don't have an incredibly broad customer footprint, developers won't want to build on your platform. And so you've got to accomplish that first thing first, right? You've got to be ubiquitous. You've got to have lots of happy customers. And we focus on that goal first. And oftentimes, if a company can just do that, they can build a really big, iconic business. But if they do that really well, they can maybe earn the right to become a platform. So that was not even in our sights, when we first invested. But yeah, I think, obviously Zoom is now in a place with the usage it has, with the number of customers it has, where I think it has earned the right to ultimately, become a platform. And I think the way that they're thinking about it is when you're using Zoom, how can you make Zoom more useful, right, and more impactful, right, for that user or for that company that is a paying customer. And when you look at the Zoom app marketplace today, you look at the Zoom platform today, there are a lot of pretty obvious things, right? If you think about applications that you often use, when you're inside of Zoom, why not make some of those applications, like, for example, note-taking applications, right, readily available, right, in the Zoom app, right? And why not make it possible, for example, if you're taking notes in a meeting, in a Zoom meeting, to make those notes collaborative and have everyone in that meeting sort of collaborating and working on those notes at the same time, and then share a copy of those notes out to everyone after the fact. That's one small example, right? But there are lots of things that connect to meetings and interactions that I think Zoom thinks are going to be made better by integrating them with, the fabric of the interaction itself, which is the Zoom platform. So Zoom also recognizes that they are never going to be the best themselves at building every single one of these applications. And so it makes sense to open the platform up and allow third parties to come in and bring their world-class applications into this world. And so that's kind of how they're thinking about it. It's still very early days. The platform is very new. I think the company is encouraged by a lot of the early interest and activity that they're seeing on it. And so we'll see where it goes. But it's an exciting concept, and I'm really eager to see how it plays out.
That's great. You were one of only a handful of venture investors that saw the vision in Zoom, got in early. So talk about what that means for you now with your relationship with Zoom. Is there an emergence opportunity to participate on the Zoom platform with the next wave of startups building on top of it? Is there does that inform your thinking? Curious about that.
Absolutely. I think we feel really lucky to have been involved actually with a couple of companies, right, that have gone on to build really successful platforms, right? Salesforce being one. And we were lucky enough to ultimately invest in Viva, which is now a $40-50 billion public company, and their very first product was built on the Salesforce platform, right? And so seeing the Salesforce story unfold, seeing the platform unfold, ultimately allowed us to gain conviction in part around Viva when a lot of other investors, didn't see that. And so when we look at Zoom and we think about the platform opportunity that's now emerging there, we want to be in the same spot. We want to be investors in and partners with the Viva of the Zoom platform, whatever that might end up being. And so, we are still on the board at Zoom. We work very closely with Eric and the rest of his team, Oded and others who are building out the platform there to help them hopefully shape the platform strategy a little further, but also to get some insight into some of the interesting companies that are starting to come up on the platform. And our hope is that we'll find those great companies that are not just building an adjunct, frankly, to what they're already doing on the Zoom platform, but frankly are building from whole cloth, a brand new application on the Zoom platform that frankly you couldn't have imagined before, right? And Zoom, we think, is going to make some of those things possible. So we're very excited, to invest, against the Zoom platform, and I'm confident we'll do so.
That's great. I'm going to lob a couple of questions that have come through, Kevin, to you. So one is, I guess very tactically, how early and at what valuation did Emergence invest in Zoom, and did it continue to back the company through multiple rounds?
Yeah. So in terms of how early. On paper, it was a Series C, but the company's prior rounds had been very small rounds, I would say. They were almost like seed rounds, multiple seed rounds. So, it was a $20-ish million financing, Series A financing, that the company, Series C, but felt more like a Series A financing that we did. And I think, again, this is public because you could sort of see where our ownership was prior to the IPO, but we had sort of 11-ish% of the company at that point. And so it was definitely a little bit lower than where we typically start with a business. Typically our ownership threshold is a bit higher than that, but we were so taken by Eric and the momentum in the business and the quality of the product that we decided to obviously lower our ownership threshold, and we're very glad that we did. The company did raise one more private round of capital. It was a couple years after we first invested. It was led by Sequoia. We participated in that financing. We did our pro rata in that financing. That was I think it was $100 million financing. So that was a round that was frankly too big for us to lead, as early stage investors. And interestingly enough, like the company really, I don't think ever utilized any of that round of capital. So they didn't have to raise it, but they did. And that's a bit of the financing history leading up to the IPO.
That's great.
Yeah.
Another question around, I guess the relationship with Emergence and Zoom. So is there an opportunity for a dedicated Zoom fund at Emergence to target Zoom applications similar to the Kleiner iFund focused on the iPhone ecosystem?
Yeah. Well, so we've talked about ideas like that, around specific initiatives before. I would say, first of all, some of these specific funds are more, in my observation, they're more marketing, I would say, than anything else. So it's not necessarily a dedicated vehicle, but it's more of a public statement that there is a certain amount of capital that a fund is sort of interested in deploying right against a certain area. I think, at least for us, and this is just, it's been our preference to date, whether it's having a specifically dedicated vehicle to something like that, or even going out and saying, hey, this is something we're going to do, and there's a certain amount of capital we're going to deploy against something. That just hasn't been our preference, right? Our view is that it's hard to know over, let's say, a 3-year fund cycle exactly what the most interesting opportunities are going to be, right? Again, our goal is to see everything that is interesting within our area of focus, which is B2B, and then select the absolute best opportunities that we find over that 3-year period. And we're only going to make about 18 to 20 investments, right, out of a fund over those 3 years. So we hold the bar really, really high. And I think what we're thinking about when we decide not to do something like one of these dedicated funds is we're thinking about, gosh, can we actually fulfill that commitment, right? Are opportunities in this area in this given time period going to be the absolute best things that we're going to find? Maybe they will be. But if they're not, I don't know, it wouldn't feel great to us to kind of put that stake in the ground. So look, suffice it to say, we are looking very, very actively at opportunities in and around, the Zoom platform ecosystem. I feel confident that we're going to end up making some investments there, but taking that next step to actually say we've got a dedicated fund is probably not something we're going to do.
That's great. So maybe turning to kind of what's next, Kevin, you talk about kind of horizontal cloud, Salesforce, even back then, enterprise, collaboration as a theme led to Zoom. I'm sure the audience is going to be interested to know what else are you exploring now is one of the next three themes that you see as exciting over the next 5 years.
Yeah, absolutely. Well, maybe I'll talk a little bit about a couple of the other existing major themes that we have, which I think will be interesting, and then I can sort of touch on a few other areas that we're kind of keeping an eye on. So today we have three, major themes in the firm, and I'll just speak briefly about each of them. One of them is deskless workforce. So about 80% of the world's workforce does not sit at a desk to do their jobs. Many of them are in field-based industries, frankly, whether it's, construction or energy or public safety or agriculture. Some of them are in non-field-based jobs, like manufacturing or retail or healthcare. But one thing all these workers tend to have in common is that they don't sit at a desk, or they sit at a desk very rarely to do their work. And one thing that we know is true is that the vast majority of business software that's been created has been created for information workers, for people who sit at desks. And there has not been nearly as much that's been built, that's been dedicated to deskless workers and the work that they do. And so that has been an area of focus for us for a while. A great example of this would be a company like Doximity that went public this summer that builds, mobile applications for physicians and other healthcare workers. But there are many more investments we've made there, and a lot more to do to build out, really the suite of great applications for deskless workers around the world. So that's deskless workforce. A second is industry cloud. So these are industry-specific applications, obviously built on cloud platforms. A great example of this would be Viva, which we're still investors in and we're still on the board of, even though they went public a number of years ago. We continue to see incredibly exciting industry-specific applications being built. And I think it continuously surprises us how many large industries out there still don't have great software that has been purpose-built to help them solve the problems of their industry, right? And we have actually invested across a wide range of industries, whether it's, I mentioned life sciences or healthcare or transportation, financial services, education, what have you. So many opportunities there still to build big companies focused on specific industries. So that's industry cloud. And then the third is what we call coaching networks. And coaching networks sort of involves the idea of embedding machine learning and artificial intelligence technology within a business application to enable new kinds of functionality that you could not enable before. So when you imagine all the data that is can be ingested onto a business application platform across all of a company's customers, apply these kinds of algorithms to some of that data, you can deliver really interesting insights and value. So a great example of this would be Chorus, which was recently acquired by ZoomInfo. So Chorus is an application for the sales function that allows a sales rep to, in real time, it actually listens in on a Zoom conversation or a phone call and will give real-time feedback to the rep on what they should be mentioning or what things they should make sure they pay attention to answer a customer's questions to try to increase the odds that a prospect is going to convert to a customer. And so really interesting application of machine learning and AI there. So those are our three major themes today. Some other things that we're keeping an eye on. One thing in particular that I will mention is we are keeping a very close eye on crypto and blockchain. Obviously, there's a lot of activity there. Our purview as it relates to that market and those platforms is really going to be B2B, right? So we're going to be thinking about B2B applications of those new technologies. And we think there are going to be some very interesting ones. So that's a place that we're definitely spending an increasing amount of time. So that's certainly what I mentioned. And another one that I would mention, and this is a little bit of a twist on social collaboration, but we're calling it deep collaboration. And this is the idea of building really unique, functionally specific collaborative workflows focused on, again, a particular function, whether it's sales or legal or marketing or product, within an organization. We're seeing some really exciting, new, interesting companies built around this concept. And that's another that is gaining some of our attention.
That's great. I see a couple of questions back on the Zoom topic, so I'm gonna fire them your way. One is, how persistent is the impact of the pandemic on the Zoom business? Will Zoom lose customers as people go back to work in person?
Yeah. Well, I think the answer is we'll see, right? I mean, kind of what happens in the future. I will share my own view is that I think we are, in many, maybe not all cases, but in many cases, companies are going to adopt more and more of a hybrid approach to their workforce, meaning in office and remote, right, than they ever have. Many of the surveys that I've seen, and frankly, even surveys of our own team, right, at Emergence, indicate that this is actually what employees want, right? Many employees want the flexibility to either work in an office or work remotely whenever that sort of suits them. And I think one of the other things that is really interesting, again, a lot of surveys have been done on this, productivity in many businesses has really not taken a hit, right, over the course of the pandemic. Obviously, it depends on the industry, but certainly a lot of the industries that have most heavily adopted Zoom, they have maintained a pretty high level of productivity despite working remotely. So to me, what that means is I think we're going to see more companies continue to want to use platforms like Zoom, even if they are reopening offices, because a lot of their workforce will either permanently or occasionally be working remotely. And a platform like Zoom, I think, is going to be critical, right, to helping a company operate and stay very connected as companies are working remotely. So that's my own view. I guess we'll all find out, once this pandemic is ultimately over.
Yeah, I was reading about the productivity improvements, and I guess one of the questions is productivity per hour increasing, or is it just partly because of technologies like Zoom, people are just spending more hours connected with their work?
I think I know what the answer is for me. Yeah. But yeah, I think, and by the way, there's a bigger theme here, which is another sort of theme that we're thinking a lot about, which is if you imagine a world that is more distributed in terms of workforce than ever before, right, and is working remotely, more than ever before, what are the tools and technologies, right, that are going to be necessary to help that, call it workforce of the future, operate at peak productivity, right? And I think, some of the things that we're using today are going to be part of that world, maybe like a Zoom. But I think we're also going to see entirely new applications emerge that are going to be, frankly, purpose-built, right, for this new environment.
So there's a question here about the announced Zoom acquisition of Five9. So the question is, there's been recent press about the FCC scrutinizing the acquisition, partly because of concerns about Zoom's Chinese presence. Has that impacted Emergence's view on building China assets for its startups?
Yeah, well, I can't comment on any of this stuff related to Zoom, as you can probably imagine. Look, I think China, there's an interesting question around China, putting aside the stuff around Zoom, for a moment. There are a lot of changes, obviously, that have been happening in China recently, including some changes that affect the investment environment. And I think everyone here is probably well aware of a lot of those things that have been taking place. We have been, for a while at Emergence, sort of keeping an eye on China, right? We think it's an interesting market for enterprise applications. It's a pretty insular market. And obviously a big market. And so in the same way that we have seen some really big consumer-focused companies built that are 100% dedicated to China, I think we are starting to see the same happen in the enterprise world. And so we're watching that, very closely. And we're kind of thinking about, should there be some kind of role that Emergence should play, right, in that market? But obviously we have to take into account not just the opportunity, but, maybe some of the risks, that are sort of popping up on the horizon for us. So I think for now, the vast majority of our attention is being paid to, markets outside of China. But, again, it's a market that we're watching closely.
That's great. Well, I think with that, we're at the end of the questions, and we're also at the end of our hour. So Kevin, thank you. Thank you for being so generous with your time and for all the great insights. Certainly a lot of food for thought today, and thank you to the audience for tuning in and for the great questions.
Yeah, well, I just want to, I would say thank you, Alan, for your great questions, and thanks everybody for attending and your questions as well. So it was a pleasure being here.
Great. Thanks all. Be safe. Take care, everyone.